What if I told you that the next Bitcoin crash is already scheduled? Not because of BlackRock, not because of the Fed, not because of ETFs, but because of Japan. Yeah, Japan. On December 19th, the Bank of Japan is expected to raise interest rates again. And every single time Japan does this, Bitcoin gets wrecked. March 2024, Bitcoin down 27%. July 2024, down 30%. January 2025, down 30% again. And now, some are warning that this could send Bitcoin to 70K, 60K, even 40K. Luke Gromen says he might get bullish again at 40K. So, the question is simple. Is Japan about to nuke Bitcoin? Or is this the final shakeout before the biggest move in Bitcoin's history? Because if history rhymes, this is where weak hands fold and legends are born. We got a big one today. All right, so let's talk about that Bank of Japan. On December 19th, they're expected to hike rates again, around 25 basis points. Sounds pretty boring, right? Wrong, because Japan doesn't move the yen. Japan moves global dollar liquidity. Here's the brutal pattern. Do you see it? Now why? Well, because Japan is the largest foreign holder of US treasuries. They hold over like $1 trillion. This is all what the yen carry trade unwinding looks like. Cheap yen was borrowed, used to buy everything, and rate hikes reverse it instantly. And we already saw the warning shot on November 30th when Japan confirmed hikes were coming. Bitcoin dumped to 83K and 200 billion evaporated from the market. So the question, again, isn't if Japan matters. The question is, was that the shakeout or is the real one coming? Oh, and yeah, when you thought Japan was done, breaking. Japan is preparing to sell 534 billion in ETFs. The Bank of Japan holds approximately 83 trillion yen in ETFs. They'll sell slowly at 330 billion yen per year, which means it's going to take them more than 100 years. 112 years. This is the most Japanese thing imaginable, but markets don't care about patience. They care about direction. Selling is selling. And again, liquidity tightens. So yes, short term, Japan is pressure. And now we pivot because this is where everyone gets it wrong. What's coming next? Well, this week's data, jobs report, CPI, PCE, Bank of Japan decision on the 19th. And meanwhile, US national debt, whoop, whoop, 38.5 trillion and still running. And here's the monster under the bed. $8 trillion in US debt must be refinanced in 2026. At higher rates, that's impossible, which means rate cuts aren't optional. QE isn't optional. Liquidity isn't a choice, it's math. 10th grade math. And when liquidity returns, hard assets win, which is why Michael Saylor just bought more. Strategy bought 10,645 BTC for 980 million cuck bucks. At approximately 92K per coin, they now hold 671,268 BTC. GigaChad isn't trading Japan headlines. He is front-running monetary collapse. Well, GigaChad gets it, some others don't. Now this is important. Luke Gromen, one of the smartest macro minds out there, just reduced his Bitcoin position at 95K. Why? Gold charts broke down. Gold outperforming. Tech correlation, quantum computing fears, the 4-year cycle theory. And he says he might get bullish again at 40K. And look, respect to Luke, but this is capitulation. To hit 40K, Bitcoin would have to fall over 2 standard deviations below its power law trend. That never happens. Bitcoin skews upward, not down. Quantum risk, overblown. Gold outperforming, historically bullish for Bitcoin later. Price action, that's the point. Capitulation always looks rational. Luke admits, quote, I don't know why Bitcoin is rolling over. That's the tell, because when analysis becomes purely price-based, Conviction is gone. This is what tops don't look like. This is what bottom psychology looks like.
Very serious people raising the potential that it could be an issue within 2 to 9 years. And the quantum stuff is way over my head. It's way over my pay grade. I try to read it and I feel like the dumbest person alive. And I am not in a position to sit here and have any debate with someone. Is quantum, is it a risk? Is it not? What I am in a position to discuss is I've been in markets 30 years and I'm watching the way Bitcoin is not making a new high against gold. I'm watching what Tether's doing. I'm watching what these people I respect in the space are saying. And I'm saying, markets are telling me that's serious. And oh, by the way, the OG whales, most selling in a cycle ever.
Oh, really?
Maybe
I didn't know that.
Yeah, maybe it's nothing. Maybe it's nothing. Now, intuitively, if I was worth 50, 100, 200, 300 million dollars, $1 billion in Bitcoin, it is probably mostly in Bitcoin. I've held it for 15 years, 10 years. I would probably be very tied in that world. And I wouldn't sell unless there was some sort of I would start to take some off the table if I thought quantum was a risk I wanted to at least hedge somewhat. And so when I see this whale selling, I can't help but think, maybe there's something there, given the price action I'm seeing when you're looking at gold versus Bitcoin not setting a new high against gold for the first time in its life. When I see it breaking down on a various momentum bases relative to the dollar on long-term charts. Like I don't really look at the chart. Like for me, I just want to see the long-term technicals, and the long-term technicals were really breaking down about 3-4 weeks ago, 6 weeks ago. And so that's really where I just say, you know what, I fully concede I might be being too cute by half. And these technicals, when they broke each of the last 3 times, as emphatically as they just broke about 4 weeks ago, the median decline in Bitcoin was 65, 70% each time. And there have only been 3 triggers in 14 years, and there have been no false triggers. So for me, it's, especially given the size that it had grown to in my portfolio, it was a champagne problem, knock on wood. I got something right for a change, but to me, it spoke to a need to right size it and substantially reduce positions because I just think it's going a lot lower. And I guess lastly, to tie back, why is it functioning? I've called it the last functioning smoke alarm for 5, 6, 7 years. Look, it's telling us the first half of next year is going to be ugly, right? Let's make no mistakes. If this Bitcoin sell-off is not just 100% tech and quantum computing related, and forget about tech, because tech's liquidity too. If this isn't just a Bitcoin-specific quantum computing sell-off, and I don't think it is, then what Bitcoin's telling us is, so we go back to that BC and AD of 2026, yikes. There's a lot of, basically everything but gold and the dollar are likely to get waylaid until we get to year 0. Is what Bitcoin's saying.
And on what time horizon are you bearish Bitcoin? 1 month, 3 month, or is this a multi-year negative view you have?
Probably a function of more price than time, but there's probably price and time. In other words, look, if I woke up and Bitcoin is 40,000 and a little bit of time has passed and there's revulsion and any number of technical indices. One of the nice things about having the size following I do on X is it's a very useful indicator of sentiment. I can just, throw some chum in the water and the response I get is pretty informative. And then it's also going to be a reevaluation of the fundamentals, right? Of, okay, where's price? Probably some time. And then, okay, is quantum getting closer, better, what have you? And again, I'm not smart enough to figure out whether it is or not. There's a quorum of people I'm watching this is their lives. I'm going to trust what they're having to say. But that's for me really more it. For me, it's for at least the next several months, it's negative. Again, if it crashed tomorrow to a level where it's okay and revulsion, I could revisit that. But I don't think that's going to happen. I don't think it's going to happen that fast. Certainly not the way the last 3 cycles have gone. And I've lived through each of those. 13, I own Bitcoin. 17, I own Bitcoin. 21, I own Bitcoin. And it was like same kind of thing. It felt very similar. The reaction was very similar. I had a tickler on my calendar literally in September, like, hey, check Bitcoin. It's the 4th year. And I looked at it, it was like 120. I'm like, nah, we're fine. And so I finally only went negative at like 95,000.
Hey, come here. Let me show you something. Bitcoin's RSI is at levels last seen at the 2018 bottom, the March 2020 COVID crash, and the 2022 bear market lows. Every single time, Bitcoin exploded higher. Extreme fear returns, plus 233%, plus 70%, plus 42%. Fear is not the sell signal. Fear is the setup. And now we've got Japan tightening, retail broken, and the experts are capitulating right before the biggest liquidity event of the decade. Now, what if I told you what the Fed just did? They've done before. And Germany also made a similar move in the 30s. The markets won't buy the $9 trillion in debt coming due, but the Fed will. Is this the endgame? We're about to bring it home, but before we do, look at our likes!
3 or 4 times, maybe. I gotta pump those numbers up. Those are rookie numbers in this racket.
Let's take a quick second for our sponsors who keep this show on the air over at the Bitcoin Way. If your wealth lives in their system, it's not yours, it's theirs. That's why we scream Bitcoin. That's why you self-custody. And that's why you call our friends over at the Bitcoin Way. They'll walk you through multi-sig, self-custody, privacy, how to run a node, and the tools that keep you sovereign when the fiat system pulls the plug. Don't wait till it's too late. Book a free 30-minute consult today using that link in the show notes. Need cash but don't want to sell your Bitcoin? Ledn is the global leader in Bitcoin-backed loans, issuing over $9 billion in loans since 2018, and they were the first to offer proof of reserves. With Ledn, you get custody loans, no credit checks, no monthly payments, and more. Visit learn.ledn.io/simply to learn more and get 25 basis points off your first loan. Now watch this.
The Federal Reserve just announced it's unleashing the money printers to finance a $9 trillion wall of federal debt coming due this year. As in, markets won't buy it, so the Fed will with counterfeit money. This is where the Fed types zeros on Excel sheets in the basement, declares their dollars like any good counterfeiter, then uses those fake dollars to buy government debt called quantitative easing or QE. Jerome Powell said the Fed's kicking off with $40 billion a month, which is a $500 billion per year, lovingly printed straight out of your wallet. Now, this is concerning because the last time the Fed did this, in the 1940s, to finance World War II, it sent inflation into the double digits. At one point in 1947, annual inflation was 20%. In fact, it's how Weimar Germany got to hyperinflation and wheelbarrows of money, because once the central bank starts printing the deficit with inflation, it's very tempting to make that deficit very big. After all, there's a lot of special interests to feed in Washington, $1 trillion here, $1 trillion there. Soon it is real money. What's even more concerning is that in the 1940s, it was just about financing government debt. Today, the Fed needs to pump hundreds of billions just to sustain a financial sector that has ballooned to nearly 5 times GDP. The Fed literally admitted this, with Jerome Powell claiming that this is not real QE, which everybody knows is inflationary. This, in fact, is necessary to maintain, quote, ample reserves so the Fed can maintain control of interest rates. In other words, the financial system breaks unless the Fed keeps a full plate of cocaine or inflation by the bar. The Fed knows this because markets cracked both times the Fed tried draining QE. There was the so-called taper tantrum in 2013 and then another one again in 2019, just before COVID, when interbank rates spiked to double digits. In both cases, the Fed got back to printing toot sweet, bringing us to so far $5.5 trillion of freshly printed QE since the 2008 crisis, which is almost as many dollars as existed in 2008. So what's next brought to you by I Trust Capital. In a recent video, I warned we are entering fiscal dominance where the central bank ignores inflation and jobs and only focuses on financing the government, which is very inflationary. The Fed just confirmed this to the tune of $500 billion per year, maybe $1 trillion if markets make it weird. In a few short months, we get a new Fed chair with prediction market call sheet fingering Trump's chief economist Kevin Hassett. Hassett has been very forthright about wanting lower rates, which is good for jobs but bad for inflation, even though inflation is already stuck at 3%. And markets have long seen Hassett as the QE guy. So short term, the Fed's now fully reverted to the inflation factory it was born to be, inflation that will drive voters in the midterm election. Long term, if federal deficits keep getting worse, which they will, we are now on the road to permanent double-digit inflation. Listen to all last week's videos in a 20-minute podcast. Search Peterson Orange wherever you enjoy your podcasts. So, hey, we'll be watching. See you next time.
Weimar vibes aren't a meme anymore. Japan tightening, America drowning in debt, markets unable to absorb the supply. And who steps in? The central banks. Because they always do. Currently, 6 of the 12 FOMC members support rate cuts in January 2026. President Trump says cuts are needed now. Rate cuts are coming. QE is coming. And based on what the Oracle, Warren Buffett, says here, Omega candles are coming too. Roll it.
And obviously, we wouldn't want to be owning anything that we thought was in a currency that was really going to hell. And that's the big thing we worry about with the United States currency. I mean, the tendency of a government to want to debase its currency over time is, there's no system that beats that. You know, you can pick dictators, you can pick representatives, you can do anything. But the people, there will be a push toward weaker currencies. And of course, that is, I mentioned very briefly in the annual report that the fiscal policy is what scares me in the United States, because it's made the way it is. And all the motivations are to doing a lot of things that can cause trouble with money. But that's not limited to the United States. It's all over the world, and some places it gets out of control regularly. As they know, they devalue at rates that are breathtaking, and that's continued. I mean, and people can study economics, and you can have all kinds of arrangements, but in the end, if you've got people that control the currency, you can issue paper money, and you will, or you can engage in clipping currencies like they used to do centuries ago. Or there will always be people. It's the nature of their job. I'm not singling them out as particularly evil or anything like that. But the natural course of government is to make the currency worth less over time, and that's got important consequences. And it's very hard to build checks and balances into the system to keep that from happening.
Everyone wants your Bitcoin. They'll scare you. They'll mock you. They'll bear post nonstop. All while Bitcoin walks through the front door of the financial system to become the new global reserve asset. Extreme oversold levels create extreme opportunity. Japan may shake out the weak hands. That's fine, because the patient, the humble, the plebs, the bull-tarded ones, they inherit the earth. What do you guys think? Let us know down below, and don't forget to like, subscribe, and give us a pamp by sharing the Sound Money Gospel with a bear, and tell him to have fun staying poor. Nothing stops this train. I love you guys. Catch you next time. Peace.
If you prefer to go down with the ship, you.